Yeah, it's raining in Iowa.
Hey everyone, good afternoon. It's Tim. It's 2 o'clock. Let's just jump right in here to it. So the headlines I think for the week are rain makes grain. We've got volatility in the wheat market coming from Russia. We've got traders kind of discounting the increased acres of corn and the decreased acres in beans, or probably more so discounting the decrease in acres in beans more than anything else. We have uh, um, some uncertainty in the corn market relating to the value of corn in China, which is more than double our value. They're trading right around $10 a bushel there. And so, net, you have a giant question mark about what's the fair value for all of the grains. Certainly, if beans, which is the chart I have in front of you, are going to lose that many bean acres and have any type of yield hit, which with good to excellent conditions, as low as they are relative to history, you would expect some sort of yield drag, or at least maybe not a record yield, which the USDA has us pegged at 52. So if you have anything tighter than that with the acreage where they put it, and demand anywhere near where they have it, then we are extremely tight in beans, which would be more bullish, which means that to us, this is all corrective price action. Now I'm going to drop down here to a 240-minute chart of beans so you can see what that chart looks like, right? Same exact contract, 240 minutes. And what I want to show you is that overall, we have traded of the top to bottom, we have traded about to the 50% mark. Let me put this Fibonacci retracement on here for you. So this is the low prior to the report. Here is this low. So we've traded actually not even back to the 38.2. So if I remove that one and go from the report day low, the intermediate back up, we have traded just below the 50%, but we've held the 61.8. So if you look at these as waves, right? So if this is wave 1 and then this is wave 2, what you have is barely a 38.2 retracement of the entire move, and just between the 50 and 61.8 of the secondary move with and we're holding this 4-hour cloud in an A position. So what this is actually looking for are higher prices. Now the next thing that I want to look at is, are we contained within parallel lines? Is this move from the high to here corrective, or is it impulsive? And one way you can tell that is by snapping a trend channel to the top. Nothing significant here, right? We're snapping to this high, we're snapping a trend line, and then to the intermediate low, we're snapping the opposite end of this trend channel. And we are right in parallel lines. Everything here is nice and orderly contained right into the top of this cloud, into an A wave, and everything else is oversold from a short-term perspective. So beans look like they're in position to find some exhaustion here and look to find some higher prices. Another thing to think about is that on this bar right here, if I snap a Fibonacci retracement just on the bar where the report came out to its peak, where are we at? And we are just back to the 50% mark of the report bar. And that's a significant level, because if these report bar highs and lows get exceeded, then that is probably more significant than anything in between them. So this corrective move back into the 50% range of this report bar is probably just a retracement. That's what we're looking at, and that's how we're going to go home today. So patience, patience, patience on beans. A lot of information being digested, and a lot of volatility yet to come. Okay, let's look at corn. Sorry, let me pull this over to December corn here. A big impulsive decline. We have this sideways pattern here. If you want to put let's go down to a 240-minute chart of this, and we want to look at this here. This is corrective. So this move, it doesn't take much to see that that's contained within parallel lines. I do think we need one more push higher in order to complete this little sequence right here. probably back up into this 520 range, 530, somewhere in there, and then that is a moment where we should probably look to be taking some new hedges. Another thing that we want to look at is this is the report day bar right here. So the high of that is 537, and if we are able to trade back up above that, that could mean something more significant is being developed, particularly if we can break back up into the 4-hour cloud or maybe even get back above it, right? That would be significant. Other than that, anything below this level here needs to be viewed as more bearish than bullish and needs to be viewed as something that should be sold. But we want to look at oil, we want to look at feed stuff, and we want to look at what other grains are doing too, because corn on its face with a massive yield with the acreage that they have said that we've planted, with demand numbers that are coming in, we're looking at a 2.3 billion bushel corn carryout, which is probably corn priced $4.50 to $5. Now you can't quite price that in yet because we haven't harvested it. So I think this range of 530, 540 to 470 is a really solid range to trade corn in. If we get above that, I think it means something else is underpinning the market, and it's actually stronger than what we have, than what we know about. And one of the things we've been talking about is what really caused this move. I know the common analysis is that it's weather, but given that beans did it and what wheat did, I don't know that that's really accurate, because the rain forecast through this entire move up, the rains were forecast. And in fact, the rains just sort of came to pass. I mean, if anything, they're on the light side of what was being forecasted in here. So I don't know that this was all just weather driven. There might be something stronger underpinning the market that we're not aware of. Certainly today doesn't tell us that. There's no confirmation of that. That's just a feeling that we have, but we don't have any fundamentals there to support it. So what we've got to do is look at corn. And again, this is, sorry, I'm putting too many things on here. From a short-term perspective, I think we need one more push higher. I don't think we roll over and just push lower. If we do, I think that would get bought. So we're going to look to buy a push lower, a push higher up into that 530, 540 range. We're going to look to sell unless there's some news that would support something different. So patience in corn. We don't have a good solid read here or a good reason to sell it yet. Patience in beans, and then from a wheat perspective, I think patience is due there as well. A lot of volatility. Nothing new to the wheat market. This entire year, basically, though, this is February, this entire year has been pegged between $9 and $7.50, and we just trade both sides of it. And nobody's really able to get a foothold on the market and push it higher or lower out of these ranges. What you can see over the last couple of months, May, June, July, are the lows are getting higher, and the highs are getting lower. So we're starting to contract this. We're getting to a point, and we all know that the thrust coming out of these triangles is probably likely to be powerful. So it doesn't take a rocket scientist to say, hey, any strength up above these highs need to be bought, and any weakness below these lows needs to be sold. That really doesn't take any special degrees or ability to analyze to understand that. It's just something as simple as be patient and wait for that to happen. We've elected to try to stay out of these things because we're just going to keep getting chopped up. But we're getting close to the point where we need to start trading it, because eventually one of them is going to stick. So, and who knows, right? If anybody tells you they know where wheat's headed, fire them immediately, because they don't know. Wheat could go higher, it could go lower. There's just so many factors at play. Nobody can know all that information. And I think as wheat goes, corn goes, and I think beans are the wild card. I think if they start really ripping higher, it's hard for anything to stay lower. So that's our analysis for now. Patience, patience, patience. We'll see what next week, how it unfolds, and we'll just take it a day at a time. Remember, there is risk trading futures and options, and you should only trade in light of your own financial condition. Hope you guys have a great weekend. We'll be back with you Monday, and we'll get news out to you as quickly as we can as needed. Have a great day. See you later.